Caution, content's hot and 24 months ahead of the competition.
Good evening. This episode of the Intraday Price Action Recap is being brought to you by the Smart Money Manuscript. Hello, my name is Timothy Lee Rogers Sr., and I'm the creator of the Smart Money Manuscript. But Tim, what is the Smart Money Manuscript? The Smart Money Manuscript is your roadmap to financial freedom. Inside this powerful course designed to transform your financial future, I've meticulously condensed over 1,000 of my public YouTube videos into 40 highly efficient lessons that span just 2.5 hours. This course is strategically designed into 4 phases to help guide your learning in the most logical and effective way possible. Phase 1 lays the groundwork, covering essential financial literacy like budgeting, banking, and taxes. In phase 2, you'll move beyond the basics, learning about brokerage accounts, figuring out how much you need for your own individual retirement. You learn about how to do fundamental research on companies, and you'll also learn how to conduct technical analysis by looking at stock charts. Phase 3 empowers you to build a robust portfolio and leverage your capital using advanced techniques like options and futures, and it also teaches you the importance of backtesting your strategies. Finally, phase 4 takes a deep dive into the advanced ICT concepts, giving you a professional edge. Each lesson includes a short quiz to help solidify your understanding. By the end of this journey, you'll have the confidence and tool that you need to make intelligent investing decisions, manage your money without fear or ambiguity. So if you want to be a long-term buy and hold investor, if you want to be a swing trader, if you want to be a day trader, if you want to trade stocks, if you want to trade options, if you want to trade futures, the Smart Money Manuscript is for you for $69.99. Yes, $69.99 for all of this here. Good evening, everybody. Hopefully everybody doing well on this Thursday evening, October 23rd. If this is your first time tuning in to Tim's Tidbits, please allow me. Well, first of all, let me turn my fan on because it get hot back here up under these lights. Right. All right. Now that the important stuff out of the way, if this is your first time tuning in to Tim's Tidbits, oh, wait a minute. I ain't sent out the bat signal. Wait a minute. I didn't send out the bat signal. I didn't send out the bat signal. I didn't send out the bat signal. Okay. The bat signal has been sent out in the Discord. Now, as I was saying, hello, good evening. If this is your first time tuning in to Tim's Tidbits, please allow me to say welcome. If it's not your first time tuning in to Tim's Tidbits, I still want to say welcome and give you a nice hearty, well, thank you for always tuning in to Tim's Tidbits. If you don't know who I am, my name is Timothy Lee Rogers Sr., a.k.a. Aranya Gundy. It's just Big Spot if you know hablo Espanol. And you are in tune to another episode of the Intraday Price Action Recap. This episode of the Intraday Price Action Recap being brought to you by the Smart Money Manuscript. It's a course that I designed myself. Put a lot of work into it. I meticulously scrub through all of my thousands of YouTube videos, probably more like hundreds. It's a lot of them. A lot of YouTube videos, and I condensed them all into a course of bite-sized chunks. Each video, it's about 18 or 19 videos maybe. And it spans over like 2.5 hours with quizzes to test your knowledge. It's a beautiful course. Beautiful course, right? If I was you, I'd buy it. $69.99. Can't beat it. And then the icing on the cake, if you will. You get an opportunity to meet with me every second Saturday, live inside the live stream channel, inside the course itself, and just talk to me one-on-one. It's not a pre-recorded webinar. You don't have to do anything extra. You don't have to pay anything extra. Every second Saturday at 12 p.m. Eastern Standard Time, I'm inside of the classroom answering your questions. Can't beat that. That right there is worth the price of admission alone, right? If you want to sit down and talk to me one-on-one for an hour, it's $150. But you can buy a course for $69.99, learn some valuable information, and then get access to talk to me every second Saturday of the month at 12 p.m. Eastern Standard Time, all for $69.99. Can't beat that. No brainer. Who we got up in here today? I see we got Yolanda in here staring at me inside the Zoom channel, right? I am not sharing the Zoom link in the YouTube anymore, in the YouTube chat anymore, because I don't want to have to keep stopping and letting people in. And if I don't set up a waiting room where I got to stop and let you in, you know, we had the issue. A crank yanker was coming on. Somebody was coming on, winding himself up. You know what I'm saying? He was winding himself up. I don't know if he was really winding himself up or trying to work something out or playing with a new squeaky toy, but he was doing something. He was doing something. So we got Adrian in the Zoom. We got Kim over there in the YouTube. Something weird going on with the YouTube names. They got like these letters at the end now. It's like, it used to just say Kim, lump name would be there. Now it says like something at the end. I don't know what's going on with that. It's saying that Kim was the number 3 top fan, but she was the first person to comment. And it says that Lump is the number 2 top fan, right? Nobody is the number 1 top fan. We got somebody named Jay Tradesy. Jay Tradesy. That's my first time seeing that name. If it's not your first time tuning in to Tim's Tidbits, I do jalapies, but I don't remember that name. I'm horrible with names, but I remember most of them, especially if it says J Tradesy, right? But welcome. If it is your first time, I hope you enjoy it. We got Marco up in here. What's going on, Marco? We got Father Legends up here. We got Rhonda Green. If y'all don't know, Rhonda Green take the best notes ever. I could tell she like an author. I could tell she write books because Jada, man, Jada, get out of here. Talk about some J Tradesy. J Tradesy. See this is what I be talking about. Y'all got 42 million names and you expect me to know who you are with no pictures. You got 42 million names with no pictures. Everybody know what my face look like. You know what I'm saying? That's why I don't tell people when I be going places. I just pop up, right? I don't tell people when I went to New York, I ain't tell nobody I was going to New York until I was getting ready to leave New York. When I was getting ready to leave New York, that's when everybody found out I was in New York. And as soon as y'all found out I was in New York, here come Mike Pence fly. Hey, welcome to my city. See? But I don't know what Mike Pence fly look like. You know what I'm saying? What if Mike Pence fly is a psycho and he just run up on me when I was down there on Wall Street or down there in Times Square or over there on the ferry. When I was in Chinatown, there was a lot of people in Chinatown. What if Mike Pence fly would have rolled up on me? You know what I'm saying? I don't know who these people be in real life, man. That's why I don't tell nobody no where I'm going nowhere. Yeah, hell, man. I be incognito. we got honey. What's going on, Tish? We got Venus over there. Let me see here. I see more numbers than I see names. I see Seawalk inside the Zoom. I see more numbers than I see names, but them all the names that I see, so them all the names gonna say, yeah, hey, man. I'm gonna go ahead and share my screen and we're gonna get right into it, man. I was hanging out today. Who was on the pop-up last night? And if you was on the pop-up last night, were you on the pre-market analysis today? And if you was on either, right? How effective was the things that we talked about on the pop-up last night and on the pre-market today? How effective was it? By a show of hands, if you think it was effective, right? Give me the hand like this right here. The hand with the finger spread. I want the hand with the finger spread, the one with the thumb on this side. I think the thumb, if I do it like, yeah, that's what it looked like. The thumb be on this side with the finger spread, right? I am missing all these notifications. Cry me a river. I see one hand. It helped somebody. It helped one person. That's a wave. Just a hand like this right here, not the wave, the hand, just the hand straight up and down with the finger spread and the hand like that right there. Yeah. The hand. Yeah, it's like that, Seawalk. Very good. The hand. Seawalk know how to follow instructions. Right. Was it effective? Did it help? Did it help? If it helped you out, all right. There you go. Adrian got the hand up there. I'm just asking, man. I'm just asking. Definitely helpful. I just watched Price. Made my clip in Asia. Then he gonna put the nanu up there. This man can't follow instructions to save his life. Hey, the reason why I asked you that, right? I'm gonna share my screen here. Take your attention away from me. Take your attention away from my facial features and turn your attention to the screen. Right over that screen, right there. That screen right there. That screen right there. That screen right there. Let me open this up so I'm not blocking anything on that screen. All right. And if you notice, all right, last night, all right, somebody in the Zoom that was on here last night, and if you wasn't on here last night and to catch the pop-up, somebody that was on here for the pre-market analysis, all right, can you do me a favor and explain what we said about this line here, this green box here, this blue line here? Well, the green box includes this red line right in there, right? This line here, right? What do we say about these areas? That line, including the green box, and that line right there, all the way up to this line up here, right? What do we say about that? Those particular lines. Share with me, please. I'm listening.
Hey Tim, I missed last night, but those are the quadrants, and when PD arrays fall across those, they are highly sensitive. That's what you said,
Okay.
right?
Yeah, we did say that. We did say that. But what we what were we looking for at this line, this box, and this line here? What were we looking for? Hmm?
Entries.
It could be entries, yes. Keep it very simple. We were wanted to see if this acted as what? The
Support.
box.
We
The
wanted the
box.
box to be support.
At first, we were going to see if the box was going to act as resistance to send us
Yes.
back down bearish, and that one
Yes.
here was a possible protected low, but we end up sweeping it. And when we close back above it, we wanted to see if the inversion was actually going to act as resistance.
Well, flip it. We looked to see if we want to see if this was going to act as resistance.
Yes.
And if it didn't act as resistance, right, we wanted this box, just like this line and this line, to act as support, because the lines are here. Why are the line? What are those lines there for? These 4 lines here, 1, 2, 3, 5 lines. Those 5 lines there, what are they for?
Quadrants of a wick.
Nope. Quadrants of our
Previous
dealer
20
range,
days.
dealer range.
yes, our dealer. The fat one is the previous 20 days, right? The fat ones are the quadrants of the previous 20 days. The skinny ones are the quadrants of our implied dealing range, right? Because we're looking for price to go into our draw, right? So this is the fat ones are the quadrant. If I zoom out, right? Uh-oh. If I zoom out, we can see the fat ones. These are the quadrants for our 20-day look back, right? But the skinny ones here are the quadrants for our implied dealing range, because this is where price has given us what we identified as a protected low. So if that low should not be taken, we're measuring from that low back to our draw as our current dealing range, right? So we got that protected low. And since this is a protected low and that's our draw, we said we're looking for that line, that red line, that line there to all act as support to take us up into our draw. And we were looking for this box to see if the algorithm was going to use that as resistance, because we was in a sell program for our intraday time frame, right? But since the daily and higher has been respecting bullish order flow, we were looking to draw into our draw up here. And this was our opposition, right? Remember, we looked at our 60-minute chart, right? And we said, because this is the high probability inversion fair value gap, we're not worried about this. We're not worried about this. This is the only thing we're worried about sending us back down, because this is the one that's designed to send us down if the algorithm is bearish. And we all know why that is. We're not going to get into all of that right here, right? And if you notice, when we got here, price showed sensitivity. And then what did we say? Y'all missed it this morning. If you wasn't on it this morning, we said now that price showed this sensitivity, we started coming back down. What did we say? Now time is getting ready to meet price. We're coming down to this support level during a new New York session. So when time meets price, right, what did the algorithm do? It manipulated the low, and then it pushed up. Remember when I said what I said? I said we want to see price go from this lower quadrant all the way back up to this upper quadrant, right? And what did it do? When time met price, it went all the way back up to the upper quadrant. Why? Because we had already went here, right? We came above the 25, used it as support, came above the 50, right? Came back down, time met price, came back above the 50, used it as support, and then went up to the 75, right? So what did it do? It used the levels, right, as support, as anticipated. Why? Because based off what the algorithm did here, it showed us something. Hey, I did something algorithmic here. So now you can use this low to pull a fancy tool out called the Fibonacci, and you can run it back to the draw on liquidity because I did something here. I created relative equal highs. I created relative equal highs. I pulled back deeply after hitting a upper quadrant of a 20-day look back. All of this is algorithmic. When I gave you that deeper retracement off of that upper quadrant, I created another algorithmic signature. So because I did all of this stuff, now you know you can run this and it will give you some very important levels to look to participate and take in long setups. Your best setups are going to be at or below this level here. Why? Because you're buying a discount and you're selling a premium. And when we look here, right, we come down to the low. We manipulate out the sell side, right? Right here, we drop down one more time. Do not take out that low, right? We drop down one more time there. Let's go down to, let's just drop all the way down to like a 5 minute so we can get all the detail, right? Getting all the detail. Okay. So, and then on the y'all saw on the, what's the name? What did we do? We marked out, right before we opened up at 9, we marked out the morning sell side liquidity because we were already below the afternoon sell side liquidity, right? We marked out the afternoon buy side liquidity. We marked out this was internal morning buy side liquidity, and this was the morning high over here, buy side liquidity. All right, that's what we marked out on the chart. And then we made mention that if price does get heavy, we do got some sell side down here, but that's only if price stays heavy off of this. All right, now we come over here, like we said, we came back down here and we talked about this too. We said that we have come down to this quadrant during pre-market. This line here, this is our pre-market open right here, 7 o'clock right there. So during the New York kill zone, we have come in contact with the quadrant there. So time has met price, right? We manipulate out a low. Okay. Once we manipulate out that low, pay attention now. It happens very often. Just need to know what signatures to look for. Can anybody see what happened right in this area right here at this anticipatory reactionary point when time has met price and manipulated out a low? Can anybody see what happened right there? What do y'all spy with your little eye right there?
A smiley face.
Yes. So price came down here, right? Came in contact with the price, right? Swept out some liquidity, right? Price came and we created a low. Price came down again, manipulated out this liquidity, right? And then rallied up above that high right there, right? Creating a low, right? When we rallied above that high, we came back down again, right? But we didn't take out that low right there. And then we rallied up here, right here, and took out that high. Once we took out that high right there, I'm important. That's why I smile, right? We have a protected low right there. Why is it protected? Because it's an intermediate term low set at a anticipatory reactionary point after we have swept liquidity. Time has met price. This is a very important price. Why? Because if you understand the draw on liquidity, if you're on side with the market, right, you're looking for the bulk of your trading opportunities to happen within this range right here, from the lower quadrant to consequent equilibrium to the upper quadrant, right? So once we get that, right, once we get that intermediate term low right there, right, what happens at 9:30 open right there? Can y'all, let me make this bigger so y'all can see it. So y'all can see it, because this stuff happens every day. You just got to know what to look for. Now, you may not get a trading opportunity every day, right? But this stuff happens a lot. Can y'all see this 9 o'clock 5-minute candle right here? Let me turn on my fancy dancy. See this candle right here? This is our 9:30 open, right? Can y'all see what this says right here? Can y'all read there? What does that say right there? Over there, right? What does that say right there? Somebody tell me.
Sell side liquidity.
For what? Sell side liquidity for what?
Regular for the regular time.
Regular trading hours. So this is sell side liquidity. This is the lowest low for regular trading hours during the New York AM from yesterday. Who's able to see that? It's somebody we know who's able to know that right here at this point at 25,003 and a quarter. It's somebody that we know that can look back through the candles and know that there's a low, the lowest low of the day, right? He's an old friend of ours, right? He's a good old friend of ours. And if I can click on the right thing, right? If I can click on the right thing here, come here, get back in the box, get out of the way, get back in the box, right? Our buddy Ant-Man, right? So Ant-Man understands, right, that at this level right here, when we look, right, if we squeeze this up right here, you see where that's anchored at? That's anchored right here, right? But when we look at all of this stuff that has happened, get out of, get out of here, brushes. I don't need that, right? When we look at all of this stuff that has happened, right, between yesterday, overnight, right, all of this stuff, what is so significant about that? Honestly, if you look at this low right here, what is so significant about you looking like, man, I got a low here, I got a low here. Like, what is so significant about that low right there, right? But Ant-Man is so smart that he can look back, say that right there is the lowest point that IPTA traded to for the New York session yesterday. That is the lowest point that IPTA traded to for the New York morning session yesterday, right? So that's an important low. Remember the 4 pillars now, the 4 pillars, the open, high, low, and close, right? We always want to remember those 4 pillars for everything that's going on at all times. We always want to be thinking about this. We always just, you know, when you see the meme and the little boy, the little dark skinned boy, he be like, and like all the numbers being for him, we always want to be thinking about this stuff, right? So when we open up, and you see this here now, and we put it on regular trading hours, boop, right? This is what it looks like right here. That low right here, even on regular trading hours. What is so important about that low, right? Now, if you don't know, I'll share it with you, right? When you're going into, right, a new anything, right? When you're going into a new anything, because time and price is fractal, right? The important areas are the high and the low of that previous thing. If you're going into a new day, what do we look at? The high and low of the previous day. If we're going into a new week, what do we look at? The high and low of the previous week. If we go into a new candle, what are we looking at? The high and low of the previous candle. If we go into a new New York session, what are we looking at? The high and low of the New York session. We can fractalize the New York session. Why? Because we have a morning session, an afternoon session, a lunch session based off the concepts that we're given. So if you're going into a New York morning session, you're looking at the high and low of the previous New York morning session. And this right here is the low of the previous New York morning session. This right here is the high of the previous New York morning session, right? And we got some internal liquidity somewhere from the previous New York morning session. If I didn't delete it, I accidentally deleted it. It was right here. It was there. I deleted it on accident. I'm sorry, y'all. Okay. So now that we got that out of the way, remember we said we had an important low. He was happy because he smiled because he's important, right? So we're anticipating that not to be touched. What happened right here at 9:30? Where did price go? We dropped down below what? What did we drop down below? Where do we go manipulate some sell side liquidity at? Right. We always say we want to see sell side liquidity be manipulated before we go up if we're bullish. Where do we go get the sell side liquidity from? Right. There's no swing low right here, Tim. Okay, yeah, yes, it is. Remember Ant-Man? Remember Ant-Man? Ant-Man, do your thing. Go find me some liquidity, Ant-Man. All right, Tim, I got your money. I mean, dog. when you when you forget the code switch, y'all ever see that video about when you forget the code switch and you on the corporate call? All right, I got to. I got to. I found. I found the liquidity, Tim. There it is. All right. So when the market opens up, right, we drop down below the liquidity that Ant-Man went and found. The morning session low from the previous New York session, right? Morning session. So we sweep that liquidity, right? And then we take off. We displace up. Payow. Right? Now, we have been watching this, right? What do we talk about? What do we say on the pre-market analysis about this high right here? Right? What do we say about this high right here? We said what? What do we say about that high right there? Somebody share with me.
That we didn't want to see it go above that if we were bearish. If it did, we were bullish.
Exactly. Right? Expound a little bit, Yolanda, on why you didn't want to see that taken if price was bearish and related to this green box right here. Share away.
Because that was kind of like our last line of defense within that area, so to speak. We had made an intermediate high, and we were still in that inversion area. So we wanted, and it just wicked above. So we wanted to see that stand as our last line of defense.
Yes, because trading up into this inversion fair value gap and creating this important high right here, right? If it's bearish, that means this PD array's job is to push us down and extend the bearish order flow, right? And if we take this out without extending the bearish order flow, that was bullish. That's in line with these lines here that we want to see act as support. And we have come down, hit the support, created an important low, right? And if we take this high, then we want to see this act as a reclaimed fair value gap. And we want to see this line, which is the equilibrium of our range, act as support. All right. And once we displace away, right, we get a closure. Not only do we offer the price, we get a nice closure there. And what do we see right here? We have a fair value gap right there. Where is the fair value gap? Right there, right? So we come down, we touch consequent encroachment inside the fair value gap, right? We open up, we trade down, drop below midnight, right? We drop below midnight. There's another fair value gap there. Where's this fair value gap resting? Right there. What did we say the fat lines were for? What were the fat lines for?
The wick.
No. The fat lines. These fat quadrants.
What else was that? The dealing range, or was that the
20-day look back?
20-day look back, right? The 20-day look back. Okay, so we have a fair value gap that's intersected the expansion candle of the fair value gap. It's intersecting with a quadrant. We have a fair value gap where the expansion candle is intersecting with a quadrant. This quadrant is for our current dealing range, short-term dealing range, right? That has a lot of weight. This fair value gap is on our 20-day if to look back. Which one carries the most weight? The higher time frame dealing range, right? So we come down to this fair value gap here, trade into it. It's supporting price very well here. And then the algorithm comes here, right? This right here is our, this is the end of the macro right there. So the macro is over, coming into our anticipatory reactionary point, right? After the macro is over, price drops down into the reclaimed fair value gap, right? Nice reaction off of it. Then we drop down and come in below midnight, right? Into the fair value gap that's intersecting with the 20-day look back, right? When it's intersecting with a quadrant per Michael, that makes it a high probability ICT fair value gap. Not every imbalance is created equal. When you know the little nuances that make them high probability, just like how we knew that this was a high probability inversion fair value gap, and we did not, what do we say? This is the only fair value gap that we're worrying about in this move. This is the only one. Well, Tim, what about that one? Tim, what about the screw them? Because that's the high probability inversion fair value gap. And just look at how price reacted once it got past the high probability one, right? We got here and hung out there for a very long time and then dropped down. This one here, this one here. Get out my way. When you understand why you're looking at PD arrays, right? When you understand why you're looking at these PD arrays, right? You know how to pick the ones that's going to help or invalidate your strategy or thesis or whatever you want to call it, right? So give a little opportunity below midnight at the 20-day quadrant, right? As soon as we close below this quadrant, right? As soon as we came down here, manipulate a little bit at the 20-day look back quadrant, immediately got back above it. Immediately got back above it, right? Hung out here a little bit there. Get some of this stuff out the way. Uh-oh. I keep writing. Stop it, Tim. Right. Got back above it. Hung out here a little bit. Right. Doing. Right. Pull it back down into the order block right here. Right. Getting ready to go into the macro time. This is the macro time here, 11:50. Displace up into the buy side. Right. Price spools up into the buy side. We retrace back down into the fair value gap that was created when we spooled up right there. Come down into that, go up to where? The upper quadrant, right? So we've used this as support during the New York session. We also used it as support during the Asian session, right? So we used that support during the Asian, gave New York an opportunity to use it as support. All right. So we've used that support in New York. Come here, use that as support during New York. Bunch of trading in here. Now we get above this quadrant here. What did the algorithm do at this quadrant? Can anybody see what the algorithm did at this quadrant right here? If you can't see it, let me show you. Right, there's a PD array that's resting on this quadrant right here. Right, this one happens to be another imbalance. Right, the expansion candle number 2, it interacts with the quadrant level. Right, we come over here, we touch that quadrant level, right, inside that PD array, right there. Okay, we go up, we create relative equal highs, right? We trade around here, right? And then we come over here. This candle right here is the 350 candle. What's important about a 350 candle? Somebody tell me what's important about a 350 candle.
That's when you start the macro.
Yes, that's the last macro of the day there, right? That's our 350 macro right there. So time is of the essence now, right? We drop down, manipulate out some sell side, right? We even come down into a PD array here, right? We drop down into a bullish order block right here. If we look over, we go over here, right? Boop. Bullish order block here. These 3 consecutive down close candles right there. Prices consolidating, expand away, right? The last last candle, down close candle or consecutive down close candles at or near equilibrium. That's your order block coming out of that range there, right? We trade down into the bullish order block right there. Okay. Then what do? We rally up and we take out the buy side, right? What buy side is that? What buy side is that? If we go to regular trading hours, right, and we look right there, that is the 950 high from yesterday. That is the regular trading hour morning high, right? What do we take out back here in this run, right? If you look here, this is the start of the run, and then the run, it ended after 4:30, but this was the start of the run up to there. What did their run start at? Yesterday morning's sell side. So it took out the morning low, right? Gave you a bullish signature, then took out the morning high. And with that, that's your intraday price action recap. If you don't think this stuff work, get off my live. Last night, I know I know I'll be on here. I'll be like, people be like, oh, this guy, it's easy for him to say all this stuff happened in hindsight. For those who was on the pop-up last night, and for those that was on the pre-market analysis today, with the exception of the exact PD arrays that happened after 7 o'clock in the morning, right? With the exception of the exact PD arrays that happened after 7 o'clock this morning, is there anything different about what I said price should do at these levels? Is there anything different? Yes, no, maybe so.
Nah, no difference. You gave them the game. I heard of somebody somewhere charging what? $9.99. How does it go?
Somebody charging $19.99, $1,999 for this on Al Gore's internet right now. So now I'll be the first to say, what do I say? I don't have a crystal ball. I don't know 100% where stuff is going to go, but I do know these concepts work. And if price interact with these levels after price does this, then it should do that. Right? And so I say this, if this bearish PD array does not stop price and we touch this quadrant, it's going to act as support. And if we get above this quadrant, it should act as support. And if we get above this quadrant, it should act as support. How do I know it's going to come to these precise lines? Because this stuff works. If those lines were not drawn on the, I don't have a magic marker that just makes this. See, I got a skill craft. It don't even say magic marker. Right? I don't have a magic marker to write on the screen and the algorithm just knows that my line is there. But how can I know that it's going to react off of that point if there is no algorithm? Anybody got anything for me, man? Anybody got anything for me?
Man, appreciate you, Tim, man. You break it down so elementary for us, man. I watched Michael video and I got a whole lot out of it, but when you break it down so simple, man, it works. This shit works.
You say, so the Michael video, it was kind of like above your head a little bit?
No, not really. But the main thing that I didn't get out of it was when he said like between the 25 and the 75, but when you put that shade area over the, man, that's really like okay, right in there. You know what I mean?
Oh,
that
so
really
it's like more visual. It was more visual. Okay. I get it. I get what you're saying.
Light right there.
I get what you're saying. Like it's just the little nuance of putting that shade there made it click.
That's the happening area right there.
Yeah. I get it. I feel you. Because I was like, it was crystal clear to me. Like, but everybody they learn differently, and so like I understand his teaching style, so I can glean a lot of stuff. Like a lot of people can't learn from him because they don't get his teaching style, or his teaching style ain't for them. And a lot of people be like, I like the way you explain his stuff better. You know what I'm saying? And I mean, I appreciate that, but y'all know I never take credit for any. I learned this from this man. You know what I'm saying? And so, I'm just happy I can help somebody. You know what I'm saying? See it a little bit clearer, because this stuff worked, man.
Yeah, we appreciate it too, man. Cause like he's saying, you got to be a brainiac, like a nerd like you, to learn that stuff and then come back and give it to us. You feel me?
Well, thank you.
You know what I mean? That's real. You've been a brainiac.
Revenge of the nerds.
You can go get the jewels and come back and paint the picture for us. Cause like he said, you put that line on there. Like I always tell you, man, when you mark up the charts, you make it so easy. I always tell you that.
Yeah. And it's just understanding why, like I say, you understanding why am I putting this here? Because Michael didn't create the Fibonacci tools. You know what I'm saying? I've been putting Fibonacci retracement tools on my chart for years, right? But now that I know where to anchor it and why to anchor it, you know what I'm saying? It's like you when you see the price reacting out, because before you just pick any high and low, and every now and then you might get lucky and it hit and it react off your levels. But when you're applying it with these concepts, oh my God, y'all see it. It's so many times it reacts to these levels all the time. Like Michael say, to the tick. You know what I'm saying? You know what I'm saying? It be reacting to these levels all the time. They did not teach me this at Boyd Anderson High School. They ain't teach me this at Plantation Elementary, Sunland Elementary, Wilton Manors Elementary, Rickards Miller, Dillard High. They ain't teach Broward Community College. They ain't teach me that. Nowhere in the Broward County school system did they teach me any of this stuff. So how am I able to do it? Because this stuff really works, man. This is what makes the market move. And if you understand these concepts and you stick to your risk management, you don't FOMO, you wait for time to meet price, right? The PD arrays don't go stale. They don't go stale. Tim, how do you know they don't go stale? I just showed you here when we looked at the chart. Remember our buddy Ant-Man was over here, right? Remember when our buddy Ant-Man was over here, right? Looking at all this scribble scrabble on this screen, what would make you think that that swing low right there was something that was worth looking at? The PD arrays don't go stale. A swing low, that's a PD array, right? Right. Look how many times we traded past that one swing low right there. Right. But when time met price, look at the reaction. 9:30 open, drop down below that one low. Boom! Price took off. Right? All of this back and forth price right here. And when we left right there, what did that make that right there? A balanced price range. Y'all see how all this stuff just tie together? Stacks on stacks on stacks on stacks, blocks on blocks on blocks on blocks. Right? We can't get caught up on the revelation that he shared with us about these quadrants during the 20-day look back and you know what I'm saying, inside the implied dealing range. And we can't get caught up on the new fancy stuff and forget about the stacks on stacks on stacks on stacks, the blocks on blocks on blocks on blocks, right? You just change for another round, add it to your arsenal. That's it, man. Only you can prevent forest fires. Only you. That's all I got, man. Appreciate y'all for hanging out with me. If ain't nobody got enough for me, we gonna call it right there. Nothing. Yolanda, nothing. Adrian, nothing. No, nothing. Empire Trades, nothing. Right? Don't see nothing in the YouTube chat. And with that, tomorrow, Friday Night Lights. Not gonna do a price action recap tomorrow. Y'all enjoy y'all weekend, man. Y'all enjoy y'all weekend. I'll see y'all Monday on the price action recap. I don't know if I'm gonna do a weekend chart prep this week. If I do, I'll let y'all know inside the Discord. But until the next time I decide to get on Al Gore's internet and share my thoughts with this thing called price action, y'all be, oh yeah, it's what, Timothy Lee Rogers Sr. I'm so sorry, aka Ryan Ugande. Y'all be safe. I ain't these trading streets, man. Gone.